Hey everybody, Patrick Jackson with Mann Mortgage with this week's market update. Today is Thursday, June 16th. It's about noon on the West Coast. And the last week in the markets has been incredibly volatile. So going back to last Friday, right after I did my last video, new CPI inflation data was released, and it came in hotter than expected. It was at they were expecting about zero point 0.7, and it came in at 1.0. So that news created a bloodbath in the markets, in all the markets, the stock market, my stuff. Bitcoins dropped a ton. And so that bloodbath really lasted from that Friday all the way through Tuesday, where really a bad 3 day stretch in the markets, where mortgage rates skyrocketed. I think the average conventional rate now is above about a 6.25 as of yesterday. It might have gotten a little bit better today. Or I'm sorry, 6.03 is yesterday. It got a little bit better yesterday, which I'll get to. So that really fed into the Federal Reserve had their meetings for June this Tuesday and Wednesday. So they met on Tuesday, and on Wednesday yesterday, 11 Eastern, they announced what happened, what actions they're going to take. And going into that, our side of things, our experts, the market people, all felt that if they did the planned 0.5% hike, that wouldn't be enough. They're not taking it seriously enough. If they did a full, percent hike, that might show a little panic, and that might have a negative effect on everything. Everybody felt like 0.75 would show that they're taking inflation seriously, and is what they should do. And the markets got what they wanted on Wednesday and yesterday, and they announced they're making a 0.75 of a point raise, which the markets reacted positively. And like I've explained before, when you hear the Fed's going to raise their rate, that's actually a positive thing for mortgage rates. Generally, in mortgage rates, we hate inflation. We don't want inflation. And the way to get inflation under control right now is to raise that Fed rate. So our stuff, reacted positively to that. So when you hear that, don't think, oh, the mortgage rates are going up 0.75 of a point. That's not how that works. So with that being said, overnight, and so the markets reacted positively. We had a good day yesterday. Things came back to earth a little bit. Good day. So overnight, however, other world central banks across the world, in reaction to our raise, also made their raises. So the main one, the one that had an effect on everything, is the Swiss bank, who hasn't done any sort of rate hike in 25 years. They did a half of a point rate hike yesterday, or this morning, overnight, however you want to look at it. That move was seen as a panic move by the markets, and they think there's some sort of global market economy, a global economy issue on the horizon. So the markets have reacted accordingly, and now today, stock market, I think we're down about 800 points right now. Mortgage stuff is kind of interestingly mixed, but again, market volatility has created, this last week's been crazy, up and down, up and down. So that being said, really, what does that all mean? It's really, so the Fed is still very optimistic about how things are going to go over the next year. Their take on unemployment is really low, and they don't think that's going to go up very much. They think the GDP won't slow down too much, and really, like I said, that's going to be very, very difficult for them to pull off when they're in the middle of one of the most aggressive, basically the most aggressive rate hiking times in 40 years, for that not to have a negative effect on the rest of the economy. So really what that's going to most likely, we're already leading to, is a recession. So, obviously, a recession is going to have an impact on housing and our total economy. But as I've pointed out in the past, historically, recessions housing has actually done, well in recessions, except for 2008, which was caused by housing. So completely different scenarios. We've talked about that before. Recession, bad for the rest of the economy, but not necessarily the worst thing, as far as housing goes. So another important point I want to make, something we lose track of, is, all this I'm talking about right now, all this market kind of stuff, this all mainly applies to investors. They're the ones that are looking at these numbers the most. They're the ones most about their bottom line. A vast majority of people that I deal with, realtors deal with, that are buying housing, they're buying it to provide housing for their family. Stable housing. If you're a renter, you have to worry about people selling your home out from underneath you, raising your rent, doing whatever. When you're a homeowner, you don't have to worry about that stuff. And with current vacancy rates, like at really, really low rates, at rent prices really, really high, especially in competitive areas, now is just as good time, if not a better time ever, to be a homeowner and not be a renter, to be in control of your housing stability, basically. So that's something, like I said, with all the doom and gloom in the markets and in the housing media and everything we hear about this and that, and all the rates are going up, vast majority of people still buy houses so they have a place for them and their families to live. And that's something we need to keep in mind. And you're still better off owning a home than you are a renter. And then on top of that, even with all this doom and gloom, like I talked about last week, top economists still are showing appreciation over the next 5 years, about 5% a year. So still a good investment. And it's, basically what's best for your family, keep your home life stable and not have to worry about being at the mercy of your landlord and getting kicked out and having to find a new place for your kids and your dog and all that kind of stuff. So like I said, I just want to make that point because often we lose track of that when this kind of stuff starts happening in the markets. So thank you everybody for joining me today. And as usual, if anybody needs anything at all, please don't hesitate to reach out. And I hope you guys all have a great day. Thanks a lot. Bye-bye.